The ECB has been talking about quantitative easing for the last 12 months. Finally, it is here. So what is the ECB doing? Basically, they will buy securities from the banks, bringing up prices and pushing down the yields, which is very beneficial to the economy. We have seen in Europe the beginning of a deflation. Actually, deflationary expectations have increased quite substantially. We have seen that inflation expectations have dropped from 2% roughly to 1.4% over the last 7 months. And the ECB really wants to act now. They're afraid of this spiral. So how can they do that? They basically have to encourage more exchanges. And in order to encourage more exchanges, they have to bring down the cost of money. Now, that's not very easy. One of the best ways to bring down the cost of money is simply by printing money and by washing the economy with new money. Quantitative easing has an impact on everybody. If we look at private people, clearly when you take out a loan, you get this loan at much more favorable terms as yields have come down. That is a very positive impact. So the consumer will feel much better in the future. If you look at smaller companies, they will again get credits. Especially in the south of Europe, smaller companies didn't get credits anymore. So these credits will help them to invest, finally also to get bigger profit margins, etc. So in other words, what we see from our borrower side, confidence will come back. On the saver side, we have another issue. If we take, for example, German life insurances, which have given a guarantee for a yield of 3.5%, it's very hard to achieve that. So what they need to do, they need to invest in much riskier assets in order to deliver this kind of returns. Basically, how quantitative easing is working, that by buying more securities, you bring down the yields. If this yield goes down too far, there's no return anymore for financial institutions. They have to increase their risk appetite to deliver a certain investment yield. That means, in other words, they are happier to invest in higher risk fixed income or even in equities. And last but not least, they will push also much more credit into the real economy. This is great from an investor's point of view because the market has been awash with cash, and this cash will lead to an asset inflation. So more specifically, what we can see and what we will see is that for southern European countries such as Italy, Spain and Portugal, you will see that the spreads will go further down, but you see also that this is a unique opportunity for investors to build up positions in European equities and to harvest very nice returns. So the ECB has started its quantitative easing program very recently in Europe. The idea is to invest roughly 60 billion a month. Now, what is 60 billion? That is a little bit more than the GDP of a country like Luxembourg. And this will be done regularly every month. We expect at the end of the year that the ECB will have spent roughly 450 billion on sovereigns. However, the net new issuance in sovereigns in Europe is limited to 350 billion. So clearly, there's much more demand than supply. And we expect that yields in Europe will simply plunge.